Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, May 2nd, 2016. So we saw a bounce today, and that's kind of what we were anticipating, and that was because of the bullish divergences on the 15-minute charts. And it's one of the reasons why I kind of prefer to see volatility in the market is technicals work. When we're in a algo grind higher, you can see bearish divergences that will go on for months at a time, like we saw on the last move up. But when we have volatility, bullish divergences for the most part will play out, and it's one of the things that I just why I like it. I mean, I'm not one of those Debbie Downers that are just looking for everything to go down. I look for things when they make sense to be able to to look on the short side. But usually when we get moves that don't make sense, meaning they just grind higher with zero pullbacks, it drives everybody insane. And the thing is that we got the bounce today. It was anticipated. We saw selling going on as the spiders was rallying. You can see the money flow minus 41.83. The block trades was minus 30.98. So we saw big boys that were selling. We already know the internals, that they're a mess right now. So not even a mess, but just very, very overextended. So I'm not even going to go over those. So let's just go over our regular charts here. And if we take a look on the 15-minute chart, this is why we were anticipating that we are going to get some type of bounce, because we had the bullish divergences. So we did get a nice bounce, typically the way the bulls work, but also the bears. It's just straight up, straight down every single day. But anyway, you can see we're right near the 50% retracement from this high to this low, and we're also at the 200-day moving average. So we're at some resistance zones. If the bulls push it through it, then we can see that we may get a move up to the 2088. And really, the line in the sand is right here. As long as the bears can hold between this 2098 and the 2100, the move is still going to be to the downside. So my guess is we burned off a lot of the oversold conditions where we don't really have any bearish divergences, maybe a little one. But so I'm kind of neutral for tomorrow. We could pop up a little bit, but it's not going to take a whole lot to get this into the overbought levels, and most likely start to see some divergences. On a 60-minute chart, you can see it's almost back to neutral. We didn't have any bullish divergences in place here, and I said there's a lot of times they won't form that and just continue to head higher, and that's kind of what they did. So now my take is that if we do get a push lower, we're probably going, the first thing that the bears need to do is take it through to 2053. From there, I believe we come down to this 2040 or possibly even down to the 2032, with the actual, targets being down here by the time everything is said and done. So we're at the 200-day moving average on the 60-minute chart here, and this is your resistance area. So if the bears are going to be pushing things down, we would see them start up pretty early tomorrow, and from there probably give back up most of these gains here, if not all of them, because when the markets are heading down and things have reversed, they go in that direction a lot faster than they go in a counter trend move, especially when it's to the downside, because volatility is up there, and that fear is much stronger than greed. So we know selling was taking place on the spiders. We know we're running into resistance right here. If the bulls decide that they need more in it, the next area we're looking is that 2097 to 2100. If they go down, I think really the earliest clue is going to be if the bears can push it through to 2068. From there, I'm anticipating that we make a move, someplace down into the 2040 or 2031 would be the next target. On a daily chart, again, we have the 5 waves up. This is my reasoning for believing that 1960, 25, or 1874 is going to come into play. It's just a matter of how are they going to get to do it. Maybe they have to try to do a back test of this broken wedge. But we have wave counts as well as a pattern that is pointing for someplace down into this area here. So they may start some jockeying around, get everybody convinced that things are back to normal and we're going to grind higher. And what that will do is have people very exposed to some type of big drop in the markets, because they're not not going to be short enough, and they're going to be really over leveraged on the long side. So with that, we got the bounce today. There's nothing really to add. We saw some selling going on. Let's see what plays out tomorrow. I still think that this is just a counter trend move before we see more selling and the lows from Friday get taken out. So with that, have a great night, and I'll talk to you guys tomorrow.